Boom shakalaka, boom shakalaka, boom shakalaka. Good morning. It's Wednesday, September 27th. I got a lot of things to go over today. Yesterday, what an S show. Yeah, I'll say S show so I don't get canceled. But yeah, it was horrible. I mean, here's the deal. Remember Monday, and I was going over SQQQ. If you had bought SQQQ, let's just go to a 5-minute chart. We're going to get rid of this strategy tester, and we're going to go to a 5-minute chart. Because on Monday, as I was doing the podcast, I said, SQQQ probably is your buy. And yesterday, so here, you were up 2.56% from that point. This is what it was yesterday if you had bought it, just in the morning. And then kind of got out before the confirmation. Now let's do today. Because if you go to that point and we move this up to yesterday, it's a 3% gain. So SQQQ, just on the 5-minute. Now you lost. The good news is SQQQ kind of gave up a little bit in the afternoon. You see right there, just around 4 o'clock. So we closed into a little bit of a high, got some money back. We're up this morning. So TQQQ on a 5-minute chart, you got confirmation. And in pre-market, it is up to 34.92. So you are up in this area right here. So where are we going? Let's see. You closed at 34.48. You are at 34.93, 1.28% right there. So you're going to wind up having this gap between there, and you're probably going to fill this gap at 35 today. It's not a huge run up, but you probably are going to fill that gap. You can see there's another gap here between 36 and 37. If we are in a strong market, and that's if, because there's a lot of bad news out there. Costco reported earnings. They are down 2%. It's a buying opportunity, but that's a big if. If we go back to our strategy tester, and we run the 4-hour on TQQQ just to try and see where are we. We have no confirmation. We are out with a 3% gain. You have nothing. So there's a gap here between 36 and 37. In pre-market, you're at 34.93. So say you're at 35. You're just up at this area right here. So the 9-day, you're still under that 9-day. Now, you're oversold. The RSI is at 28. The MACD is well down. The MACD is probably going to look at the last time the MACD crossed up. You had an entry at 37. You could have got held on and had a nice 3% gain, or you could have sold out at about 43 when it started to cover that gap up there. So right now, I would say that 38 is probably, if we get into a rally, 38 on TQQQ is probably the rally that we would get, and the top. That is where the 200-day is. You can see the 50-day is still moving negative. The 200-day is still positive. You don't have huge amounts of volume blowing this up. You can see when we went up here, you had some volume driving that up. The MACD is below the oscillator, so you are oversold. In the short term, this probably makes sense. So, do a good amount of that one. A good analysis of that. Yesterday, I was doing an analysis of Seeking Alpha, just kind of doing stuff. I will go over it in a little bit here. I'm going to move you to big head, Gary, so I can show you portions of this. This is my portfolios. So I've got a daily stock pick core portfolio. I've got my healthcare savings account, my TOD, which is the individual account, my rollover IRA, and a Roth IRA. Basically, it imports everything. You can see yesterday was harsh. Yesterday was really harsh with a lot of this. But remember, I'm 50%. 50% Apple. So Apple was way down yesterday. That hurts. So in all of these accounts, I hold Apple. But you can clearly see these stocks. So I liked Seeking Alpha. This was one of the biggest things. It gave me a rating, a health score. You can see it. It's a health score for each portfolio. And I'm in the high threes. My Roth IRA, ironically, which is, that is probably my most conservative. I mean, I would say the Roth is probably the most conservative. My absolute riskiest is my trading, which is the individual. That's the riskiest. But the core portfolio is at the lowest because that is considered risky. It's got 35 stocks in it. Probably shouldn't have that many. I am using Seeking Alpha to actually move our core portfolio around. And that's what I'm using Seeking Alpha for. I'll move you back to the small head. The portfolio analysis, I love that you can link your brokerage account. Once you import that portfolio, you can do multiple portfolios if you want. You get news alerts. You get emails about your portfolio. I have a small account in Webull, but I believe that Webull does some of this. But I have alerts off on my phone, so my app doesn't give me a bunch of alerts, a bunch of like crazy alerts and stuff. Yeah, FYI, boomer alert. But this is what, portfolios here. This is the email that Seeking Alpha sent me this morning after I imported it. Now you can see Roblox, yesterday's big gainer. PXD was up 1%. XOM was up 0.15. You can see Amazon was down 4.3%. Shopify was down 3%. Simon Property Group was down 2%. I love this. Oxy got a rating upgrade from hold to buy. I don't know who it was from. We can check out that later. But I got it in an email. Then the breaking news with all of your portfolio news that came in overnight. This to me is worth the $186 because I do have a $50 off coupon. The links are down below. You have a free 7-day trial. I'm still trying it. I'm working it into my system, but I can guarantee you that this will be a regular in my system now. I really, really like this. It took me probably an hour or so to set this up. If you follow a stock, you can actually set price alerts. So for Seeking Alpha, if we go over here, let's go to Seeking Alpha. And let's just say, and I learned this on YouTube, so you can, there's tons of freaking Seeking Alpha videos out there. You can go and look at it. But if you follow, I'm following it because it's in my portfolio. I can unfollow it, but you can add custom notes. You can add it, an alert if you get ratings change. So the Wall Street has it as a buy. Seeking Alpha analysts have it as a hold. Their Quant, which is, let's say, the Quant. Does it give me? The overall Quant is not an average of the factor grade listed. Instead, it gives a greater weight to the metrics with the strongest predictive value. I like their Quant. I mean, I would agree that it's a hold at this point at 171. I think you're going to have 160 as a handle at some point. But, in pre-market, let's take a look. In pre-market, you're at 172. So you're up 0.59. But I love that morning summary. I love the stuff. So I was doing a lot of work with Seeking Alpha yesterday. So I'll put some of the stuff in the newsletter. I am an affiliate, so I do get compensation when you guys sign up. I think they're looking more at the number of clicks I can drive versus this. Speaking of kind of the portfolio, Amazon was the big loser yesterday, and you saw that in the email right here. Amazon 4.03%. We talked about how the FTC was going to file suit against them. They're in suit right now with Apple. And there was some testimony yesterday, but the suit was handed to Amazon yesterday. Here is a masterclass on how to look at this suit. Gene Munster goes over it a lot, high level. This has been rumored to be in works for the past several months, and it focuses on Amazon's online retail business, not AWS. It's Amazon's online retail business. So it does not focus on AWS. That is key. AWS is the growth factor of Amazon. It appears the remedy is focused on policy change, but the potential of the FTC asking the court to break up Amazon remains on the table. Gene Munster's take, and he says it down here, I think Amazon will win. Even though the company dominates online shopping, there are still endless ways buyers and sellers can transact outside of Amazon. Think Walmart, Best Buy, Target, Shine, Temu, Etsy, etc. Evidence the company is not a monopoly. Implications beyond Amazon, the FTC will probably take one more shot at big tech, likely Meta. Google is likely in the clear, given it appears to be moving to divest its ad exchange. Apple has already won lower court precedents over App Store pricing that reduces FTC risk. So what he's saying is, hey, they're probably going to take on Meta because that's what this administration is doing. They are taking on all of big tech. Because Congress won't do anything. I mean, let's be honest. Google is in the clear because they've said, "Hey, we're going to divest our ad business." They've started that position, and Apple has already won lower court cases, so it's likely that they won't win a case. So, in my mind, that means Amazon right now at 126, buy it. I mean, you could go lower. Look at that MACD kind of slashing down there. Your RSI is at 28. It's up 0.17. I don't want to say that you're at the bottom. You don't have confirmation. But if you're in a 5-year trend for Amazon, again, remember, up here at 176, these are the highs at about 180. On the weekly, you're just below your 200-day. You are using that 200-day as resistance right now. The MACD has just crossed over. If you are looking to start a position, don't wait. You don't want to be, waiting around while the market turns, because in my mind, again, we went over this earlier in the week. I think we're seasonally testing just seasonal lows right now. And on SPY, I think 430, I think, was the support level that we broke, and we're at 425. In pre-market, we're at 427. The resistance level is going to be about 440, 437 to 440. If you get down to about 4,000, or 400 on SPY, that's where you kind of get, hey, load up the Brinks truck, because I just don't see a lot of issues with the economy going into the fourth quarter. The Fed is higher for longer. That is being brought into this. Remember too, and I think it was somebody brought it up on the private Facebook group. But if you go to the front page of FinViz, and let's just update this, right down below all the charts, there is a list of total ascending, descending. You can look at this. It's 15 minutes delayed for the free version, but the total new high and low. You can look at the stocks that are trading above or below their SMA 50. This is the New York Stock Exchange, NASDAQ, and Amex, the American exchange. You can look at these things right here. Now, it is significantly the stocks that are below their SMA 200-day, the stocks that are below their SMA 50. You can see this. Where will the S&P be in the next 5 minutes? Click bull, bear, positive market sentiment, bear for negative. This is just their internal poll that they kind of have going through the day and stuff. But this is important to look at, because your SMA 50 of the total stock market, I think it's like somewhere in the neighborhood of 5,000 stocks or something, only 18% are above the 50-day. Only 32% are above their 200-day. Well, what's above the 200-day? If you go and look at a daily of Apple, let's go and look at a daily. You're above your 200-day. That's the red line right there. You are below your 50-day. If we go and we look at, and I'm just going to keep this on daily. If we go and look at, we look at Amazon. You are above your 200-day. You are below your 50-day. If we go and look at Boeing, you are below your 200-day. You are below your 50-day. If we go and look at Bank of America, you are below your 50-day and you're below your 200-day. If we go and look at Cleveland Cliffs, we are below our 200-day. We are below our 50-day. If we go and look at Costco, we are above, in pre-market, we're below our 50-day and we're above our 50-day and we're above the 200-day. Disney's definitely going to be down. You look at Devon. Devon is below both. You look at something like Exxon, Energy, which has been drained. We just had the golden cross on Exxon. And you're above your 50-day. You're above your 200-day. So as far as looking at FinViz, this is how you can tell the view of the market. The top 8 stocks have been driving this market. That bottom half They are unhealthy, and they are below their 50-day, and they are below their 200-day. So it's not, if you have a really, really good stock market, these are switched where 81% are above the 50-day and 68% are above the 200-day. So we're not in a super healthy market, but go back to Warren Buffett's. When other people fear, that's the time to get greedy. And I don't know if that's the exact saying that he did. Target said it will close 9 stores across its thing. And this is to address some of their crime and safety threats. Target is closing locations in New York, Seattle, San Francisco, and Portland. Heavy kind of places where they don't necessarily prosecute for petty crimes. So it's an interesting strategy. They're looking at, hey, we've got a couple of $1 billion of theft going on. It is they believe it to be organized crime, and they believe it to be employees and kind of not necessarily just the smash and grab stuff, but that does add to it. But they're going to close 9 stores. The stock is flat. It's at 109. I think I'm finally losing money on this. I just am unlikely to sell for a stock that's just been beaten down like this. And it's hard to hold, hard to get rid of. I do own, I'll tell you, let's look at it right now. I'll look at it live in my Fidelity. Let's see, all positions. We're going to go here, but it's asking for my Face ID. So I love Fidelity, man. They're apt to me just because I know it. Let's see, Target. We're going to go down to Target. I own 108 shares. I am total loss 0.2%. I am negative. I am officially negative. My average purchase price average cost is $109.79. So I'm down 30 cents on that one. And I do have 5 figures. So it's not a insignificant amount, but that is a stock that I was up somewhere about 30-40% on. Just bad management, bad cash management. Never thought it would get down here. But I am going to pull them out of the core portfolio. And I'm working on that with Seeking Alpha to try and make sure that I get a good portfolio. Not meant to be political, but what's my opinion? My opinion on Target is I think those places, it's heavily blue states. And I think I've mentioned it before. I'm middle of the road. I'm not pro-Trump. I think, I have a history with Trump, family history, being from New Jersey and stuff. Man's a criminal. And anybody in New York that grew up, anybody involved with Atlantic City at all will tell you that. He wants power. He is just, Chris Christie has said it perfectly. He's not the Donald Trump that he was friends with, but he is the Donald Trump that I knew growing up. Greedy, power hungry, and just will say anything to get elected. And it's not about the money for him. Well, I shouldn't say that. It is about the money. It is about the power. It's about being in that office. So I think he's corrupt. But again, outside of that, I am middle of the road. If I had to vote today, I would probably vote for Chris Christie, even though I think the guy's a bit of a mobster. But I do think that I like a couple of things that he says. The one thing that I like about Vivek is that he said he will, budget is number one in his mind. I think we're at a crisis with spending, and that comes from a liberal. I'm not a self-described liberal, but my friends think that I'm a liberal. I am a liberal when it comes to social causes. I do think that we should help. I just don't think that the government is the right place to help. So spending is out of control, but we can get on the political bandwagon. But Target is clearly targeting the blue, meaning New York City, Seattle, San Francisco, and Portland. Those are places where the crime is out of control. And I think, they do need to address the crime issues. And I always have said this. I think Target didn't take the crime seriously enough, meaning that when people were coming into their stores, and not only, smash and grab kind of crime, I also think that when people were coming into their stores and harassing employees, that's trespassing. So I think Target could have taken a super strong stand in, hey, if you cause a scene at our store, get out. We're going to have security guards. We're pressing charges. We're absolutely 100% banning you from our stores. There can 100% be photo tracking, facial recognition software. I believe that some stores even have it. Walmart may have it. I mean, Walmart yesterday, when I was asking to use their Wi-Fi, they said, we will track you throughout the store. So they know what products I'm looking at, how long I'm sitting there, just based on their Wi-Fi. So I think Target could have absolutely, and it goes back to good product, good stock with good products, with good earnings and good management. This one has bad management. So you got to get the management out of there. They haven't managed the inventory well. They haven't managed the crisis well. Now they're closing stores. I think they're doing the wrong thing. But that to me is, again, above my pay grade. Costco. This one is opening down 0.51. It was down 2%. So it opened up, looks like it opened up at 547. You're already at 552. Strong. They beat revenue. They missed EBITDA. They beat member fee estimates by 3.4%. They beat GAAP. I will include some charts, but they beat everything. It's just, they said the consumer. I'll include that Seeking Alpha article. I will show you the charts. This is just adjusted comparable sales continue to grow, but they're slow. So you can see Q1 2022 adjusted comparable sales. It's down to 3.8. So they're slowing their growth a little bit, and that's why the stock is kind of evening out. If we go and we look at this one and we look at this on a weekly basis, you can see it has been a super, super strong performer. You're almost at all-time highs. Your all-time high was up here at about 586, and this is a weekly. 586. If we go to FinViz and we look at Costco, and I'll use FinViz because everybody can look at FinViz. Some of the stuff in Seeking Alpha you may not be able to see, but the 52-week high is 571. The target price is 569. You're at 552. You should start to see a bunch of these upgrades, holds, blah, blah, blah. But the most recent, September, from HSBC Securities, $600. $600. So I like that. One that got an upgrade, Sherry will like this. Sherry is in the middle of moving, so I'm not sure if she's here. But Mattel got an upgrade. It's up 5%. It's now up 3%. This is the Barbie one. I mean, she called Barbie back here at like 18, and she said, I'm buying this one. Kudos, Sherry. You got the upgrade there. XPO Logistics. This one got an upgrade. I like this company. This is a shipping company. You have been holding here in this range between probably about 60 and 80, 70, say 65 to 75. You've been in this range for quite a while, since July. Back here from April, I mean, look at that 126% gain from April until August. This is the algorithm, 126% gain. This has just been a mover. Now, if we go and we look at this one, XPO, let's look at their upgrade because let's see if they put in upgrade Evercore, $79, and you're trading at 68. So you got a nice 10% move in that one if you get to that target. Its 52-week range is only up to 76. You're 11% off your 52-week high. It's up 104% this year. 104% year to date. This is not a short squeeze. This is a very, very good and well-run company. And this was when I think Yellow went out of business. XPO benefited when Yellow went out of business. So let's look at some social requests. Butch from Facebook. I will read you what he said. Really interested on everyone's thoughts on this. Price into demand, low cap, and high risk. Operating at a loss, still with negative cash flow, makes most of its money through royalties. Chart doesn't look great, and insider sales near tier to CMP. All moving averages on the time frames negative. RSI oversold, but floating in the middle of the range. I like the AI. Lots of partnerships in the auto industry and restaurants. They've just been granted a patent for interference from speech audio today, but still sold off. Down nearly 10% today. I've traded this with varying results during the AI rally. Really want to hold a bag for the long term, but not sure this is the right price or the right conditions to buy. Appreciate your thoughts. Well, you'll hear a lot about picks and shovels, and what picks and shovels is during the gold rush, you were better off investing in the actual tools to get the gold out of the ground than you were investing in the actual gold or trying to mine for gold. The people who had the picks and shovels, they were making the money. So that's why you see it's not the software companies that are blowing up, other than OpenAI, with ChatGPT and some of that kind of software. That's just it. You get the run up on that one because they've had consumers just hounding for them. Ironically, and excuse the pun, but SoundHound hasn't had people hounding for them. You said it. It's not making money. Higher for longer has a problem with this company. Now, here on the algorithm, you don't have any confirmation. That 9-day is still moving negative. Today, you're up 10%. You're at 176. It's a great move, but you still are not above that 9-day. The MACD is kind of flat. I mean, look at how much this has fallen and how that MACD has come down. But even when the stock wasn't really rising that much, that MACD was moving up. Now, you're right. The RSI, if you'd bought yesterday, probably a time to buy because it's up 10%. Any reaction in the market is an overreaction, and something that's down 8% probably gets a pop the next day. The problem that you're going to have is the fundamentals. So if we go over to FinViz and we look at this one, they're losing $107 million. They have cash on hand, $3.09. They have $160 million floated. So they don't need money. Currently, they do have money. It's a small market cap company, but they are losing $107. Their target price is $5.05. Let's move down. It's kind of recent. I mean, today, Davidson initiated with a $5 price target, and that's what they're basically hanging their hat on, is about $5. I don't think it's horrible. You can read some of these if you guys want to look at it, some of those news articles. But you're right. I mean, look, why are people, the CEO, Chief Technology Officer, is selling at $3.50? It's small lots, but that's big lots. For the CEO just sold $685,000 at $3.57. Yes, they're cashing out. The chief financial officer just bought $100,000 worth at $30. Director bought $30. I mean, they're putting money in at the high price to try and show where they think it will go. Doesn't always work. That's kind of more of hey, we're going to get some news coverage on this. Year to date, you're down 9.6%. In my mind, I don't think it's a horrible play. I wouldn't put a lot of money into it. I would wait for these charts to move. Now, the algorithm, here's just the benefit of the algorithm. You lose 13% in the algorithm over 17 months. It's because it's a new company. You won't make, you don't have 24 months of data to go back to, but you do lose 13.7%. You win 34% of the time. Your average win is 34%. You win 38% of the time. So almost 4 out of 10. It's worth a little bit of risk in my mind. If you bought and held, if you just bought 17 months ago and you held, you've lost 81%. So it does make sense to try and risk it on a high volatility stock. I would trade it. I wouldn't own it. You're mentioning you really want to hold something. I would hold the pick and shovel. At this point, the pick and shovel is probably Microsoft. It's probably Google. It's probably Nvidia. It's probably AMD. It's those companies and it's Apple that have access to a strong consumer base to be able to launch AI at scale, or they have the actual tools that make up AI, like NVIDIA. So, that's one. Scott, he brought it up in YouTube. Say, hey, is it time to buy ELF? And I saw this on Seeking Alpha. I just looked at it, and it's from this guy, Bill Gunderson, who is an investment group leader. ELF, a beauty of a growth stock that continues to deliver. Ironically, I read this article. I'll include this in the newsletter. Hopefully you can read it. I think it might be a premium article, so maybe you can't, but let me know if you can't and you want to read it. I can see what I can do for you. But what I noticed when Scott asked me about, hey, is it time to go into ELF, was the chart. It looks good. It looks really good. It's up 2% today, but look at how far down that MACD is. This is a stock that has continued to rise. This is a stock that I think you'll benefit from this one more than Alta, because you do have, and let me pull this MACD down. I like the MACD, but I don't like to see it that much. I just like to see if it's pulling forward. But yeah, so look at that stock. That stock rise is just phenomenal. That's just this year. Let's look at a weekly of this one. This is the pullback that you want to see in a stock that is continuing to grow. You would like to see it get back to that 50-day. You're not going to see it get back to that 50-day. You're seeing it use that right there, that 21-day, right, that yellow line right there. That is with its Bollinger Bands. It's right in the middle of the Bollinger Bands. Looks like it's cinching up. Get ready. I think this one's ready to take off again. I think Kramer or somebody did a really good look at this one, whereas if it had the valuation of an Alta, this would be a $180 stock. So I like ELF. I think ELF is your pick. I picked Alta because they were beauty. I picked wrong. I think I'm down on Alta a little bit, but I'll include that article. Now, let's look at some scans. MCI, which is Super Micro Computers. This is the one. This is another pick and shovel when it comes to AI. These are the guys that put together the NVIDIA rigs for anybody that needs AI. They're calling Super Micro Computers. This guy grew up with Jensen Huang. They started their companies about the same time, so they were very good friends, blah, blah, blah. This is using the 200-day as support right now. 245 was the buy-in. You're at 252 right now. I am holding at 280. I think that gap gets filled. Their earnings are coming up, I think in November. Yeah, November 1st, October 31st, somewhere in that neighborhood. That one crossed up. NVIDIA. Is it time to finally buy NVIDIA? They're up 1% today. They're using that 200-day. You can clearly see it. I mean, that 200-day is your support. It hasn't lost the 200-day. The 50-day is starting to turn negative. You haven't seen your death cross. I would start, if you want this long term, start adding to it. I am probably going to buy here in the 420s. I'd like to get it at 419, but like I said, I don't want to time this one. At 424, I'll probably buy this one because it does seem you have confirmation over that 9-day. Roblox, another core portfolio one. What's interesting is Seeking Alpha tells me that Roblox is in danger. 27.25, you're up 1%. $27 was the buy. Now on the last one, you did make 3%. This one, the algorithm loses you 66%. Buying and holding loses you 66%. Your average win on this is 14%. You only win 34% of the time. You lose 66% of the time. So the algorithm's a little bit harsh on this one if you use the 65-minute algorithm. And we take a look at this one. Let's just run it real quick. You're in at 25.63. The 65-minute algorithm doesn't really work either. You win only 32% of the time. This one's a tough one. I mean, it's a tough stock to trade. Again, I think they're the only ones that are winning in the metaverse. It's up 1.3% now. But I continue to say I think it's a $30 or $40 stock. I think you can play it to 30 now. At 40 is probably in a really good environment. Rig, we talked about Transocean yesterday having that cross up. RIG, some of the energy names that are having cross ups. Rig is one that has a cross up, and it's showing what a cross up means is it's a bullish sign. Rig, $8.60. You can clearly see that MACD is just hovering around. They have earnings coming up November 1st. $8.60. I continue to say it's a $10 stock. I think that this is one that gets the benefit of higher oil because people will be moving oil because of demand, blah, blah, blah. The next one, LNG. If oil is up today, We can take a look at Boyle after this. But LNG, you can clearly see it's just capitulating. I mean, the Bollinger Bands are cinching up. This one's getting ready to go. Your 200-day is negative. Your 50-day is still positive. You had this golden cross right here that has kind of moved up a little bit. It hasn't moved up enough. It's a little bit expensive. Honest to God, it's a little bit expensive, LNG. Their forward PE is 14. Their PE is 4. So they have to grow considerably to justify this. They're up 9.75%. The average target price is $199. You're at $164. I'd probably trade that one under $160, to be honest with you. But Boyle, remember, Boyle is a decaying asset. So it's not an investment. Boyle is a decaying asset. It is up what, 3% today? I can't really see it. Let's say. It is up 5% today. It is at 53.67. I continue to say KOLD is the play. You've been in KOLD for a while now. I think you've made some pretty good money in KOLD. 52.65. You're at 61.74. So one that I have in my watch list that I think is a good investment and a good risk is Sabre. I haven't taken the trade on this one. I have traded this one in the past. You have some gap below here between 408 and 390. This one, it looks interesting. Sabre Technologies. They are a travel agent software. I like this one. And anybody that uses a travel agent knows Sabre. If you have a travel agent and your friends or family, ask them about Sabre because you do know it. It is travel, and travel has been hot. I was expecting it to come up here, but look at this trade from $3.26 back in July 5th. You got all the way up to close to $6. Did it hit $6? $5.64. So it was almost double your money. That's a good one. Again, you want volatility as a trader. Ring Central, which is a electric IVR. Ring Central. This one, it kind of crossed up. It's got a secondary cross up. I wouldn't invest in this one. The only reason I'm bringing this one up is because it's an interesting one that I think. I was on the daily. Why was I on the daily? This one, there you go. 29.36. Ring Central. Let's look at Sabre. Again, I think I changed that one to a daily. I didn't mean to do a daily, but Sabre, here's the 4 hour. You're above the 200 day. You're using the 200 day. That gap is a little less. On the 4 hour, you can see the chart just looks different on the 4 hour than the daily. You do have this gap down here that is in danger. I do think that if you start touching the 200 day at 413, you get out because I think that gap fills down there. But I like this gap up here to be filled, 624 in Sabre. I don't think that's crazy to think that it will be back up there. Baidu, which is a Chinese search engine. This is the Chinese Google, I think it's sometimes referred to. This one, 130, 101. And you've got the MACD cross up. It's an ugly chart. Ugly chart. If you want to invest in China, I always say that Baba is probably your best bet. One that I don't know if it's time to put into this one, but this has been an ugly downturn. And it's Dollar Tree, DLTR. This has gaps all the way up. You're starting to see a little button hook here. And you're starting to see it in a slight way. Not a big way. But the last trade that you had on this, 117, you saw it in a slight way as well. Wait for confirmation. Because once you get confirmation, say at about 108 or so, once you get that confirmation above that 9-day, you could start to see this one come back up. It is not crazy, the valuation on this. It was crazy, the valuation, but the PE of 19, forward PE of 15 is not crazy. If you look at, let's just look at discount stores, and we'll look at the PE. We will look at Costco, 39. Look at Ollie's Bargain, 31. Look at Walmart, 31. You look at Price Smart, 19. So your Dollar Tree right there is at 19. It's not horrible. Dollar General is at 10. So Dollar General might be DG, might be a better chart to look at. These are just companies that have been beaten down. This is similar to a Target, where it's just the valuation got too crazy on these. They said that the consumer is slight. You can see Dollar General's just continued to slide, but it's got a similar chart. So Dollar Tree came up. Regeneron, I talked about this on YouTube Live just before, but Regeneron is one that I invested way back when. This is a hype rally for COVID. That's my belief in this one, and I haven't done any research, so I could be completely wrong on this. But COVID has come back into fruition. In fact, I ordered my free test from the government again because they even have I think they're just looking to get rid of expired tests. They said, hey, it might have an expired date on it, but you'll be fine. But yeah, Regeneron here. This was when I invested. I think it was around $600. I think I got around $660 or so, and then it came back down. Well, it's at $835 now. That's a good one. RTX is the final one that came up in the S&P scan, and this one been beaten down. You're below that 200-day. The 50-day is still moving. You've got a cross up, and the algorithm says get in. I would again wait to see if you're above that 9-day and you have confirmation. Miss the first 5% and grab the next 5%. It's just not worth not knowing where the bottom is on this. Target is a great example. At 110.12 right now. I thought this was the bottom at about 130. I thought this was the bottom at about 150. You never know where the bottom really is. So wait for that confirmation. And you can see when you have confirmation, you do get some type of pop. When you don't have confirmation, it just continues down. So wait for it. Wait for it. If that's the number one thing I can tell you, wait for it. Okay, couple of things. We're going to go over offers now. Seeking Alpha, I went over it, $50 off. There's a link below. The normal price is $239, $189 for the year. I'm getting the value out of it. I don't know if you'd get the value out of it. The good news is free 7-day trial. There is not a time restriction on this. I think it goes until for another couple of weeks or so. But they always have a $50 coupon for some reason. They might up my offer again. I like it. If they renege my offer, I may just pay it and get it. I'm liking it that much. TrendSpider. This one ends Friday, September 30th. It ends. Today is the 27th. If you want this, the link is down below. This is for new customers only, is what I'm told. It is $249. The normal price for this is $780. You can skip the trial here and buy it for $468, but why would you do that? Skip the trial and get even half that price at $249. $249.60 is what you'll pay. You do skip the trial, it's immediately billed. What you're going to do is you're going to sign up, then you're going to email me at dailystockpick3, dailystockpick3@gmail.com. If you want any of these links, they're right here. There's the Seeking Alpha deal. There's the TrendSpider deal. Webull, just click that. You get 5% on your money. I mean, it's really, really good. That's the next link down there. Newsletter. If you're not subscribed to the newsletter, I don't know why. It's free. I post it every day that I post the pod. I post the newsletter. It includes all the charts. It includes all the offers that you're hearing about. It includes everything. It shows up. It's got the links to the Spotify, links to the YouTube, and all my notes and charts that I use to do this podcast. It makes sense. I mean, here's the thing. You can't listen to me for an hour a day, every day. Read for 5 minutes. That's all my notes. Maybe you don't get my commentary about my fiber intake. Maybe that's it, but yeah, you get it. Visible. If you're paying anything more than $25 a month, get Visible. You can look at the plans here. Check out our plans. I think it's $25 and $35. Yeah, I got the $25 plan. So I like it. This one is basically your Verizon plan for $35 a month. It's really good. Click on that link. Get your $20 off your first month. If you're buying a Tesla, just click on this. It gets me some miles, but it also gets you $500 off and 3 months of full self-driving. And I think the Model 3 is down to like $35,000 or something. I just had two friends buy them. One bought a Model Y, the other one bought a Model 3. Gary's referral, yeah, it gets that. $29,740. God, that's a good deal. God, that's a great deal on a car. And I love my Tesla. Mind you, I love that Tesla. Savvy Trader. I had somebody say, hey, I've made some gains on this and I want to do a little bit more gains. I want to do a little bit more trading. Savvy Trader. If you don't have a plan and you don't have back testing ability, just freaking go over here, set up a profile. You don't have to follow me. If you want to follow me, you can follow me, but you don't have to. And set up a profile and do paper trading. Just when you say you want to buy and you think your system works, buy. Paper trading is called just practicing. You can buy, it will track it with the live price of the stock, and you can hit sell whenever you want. It's free money. I mean, it's not free money where you can cash out, but you can track your trades. Create a system. Understand how that system works. Don't get nervous. Just paper trade it. So I've got my two portfolios here. The core portfolio is just an even weighted portfolio of all the stocks. If we go over this and we go all, you can see I've lost on some. I've gained on others. When they entered the core portfolio, I buy 100 shares. And if I pull one out, I take out 100 shares. You can see Target was bought. I'm down 17% on that. It was just one day a couple months ago when I set this up. I just bought 100 shares of each. So it's up one day. You can see 1 week down 3%, 1 month down 1%, 3 month down that. But this was set up in June when you hit the highs, and then you just kind of fell down. So and the reason Costco's so high, but it's up 8%. Is because they had the highest share price. It's just 100 shares of each. But if you don't want to follow that one, you could follow the trading portfolio, which I'm going to probably update here in the next week or so too. You can see Alta. This is just today, but here's the all-time. AMD, I'm down 11%. DraftKings, I'm up 0.49. I mean, DraftKings and Palantir are the only ones that I'm slightly up on. This is a bad portfolio. But this is the one's the worst. Sedge. Yeah, I think I put in $2,000. I've lost $1,200 on that one. Most of them are down a little bit. I'm not worried. PayPal, a lot of these I want long-term. So they were initial buys for long-term. I don't mind holding them. Ulta, I may swap out for Ulta for ELF. I may just take my $600 loss and swap that out for ELF at this point. PayPal, I'm not taking my 13% loss. I'm going to dollar cost average that one up. The new CEO, I do believe, will do well. AMD, I think that's a $120 stock. I'm not worried about that one. DraftKings, they just got an upgrade yesterday. Again, they've shown that they can get to 33. I should have sold at 33. I didn't. NVIDIA, I'm just adding more to that one. I sold out a good portion of my NVIDIA in my retirement account that I did not sell out here in the trading portfolio, but I did sell in my retirement account at 505, 510, somewhere there. But again, if you want to follow my trades, then just go and follow on that stuff. Again, the link tree is linktr.ee/daily stock pick. So that's it. Okay. See you guys tomorrow. Bye-bye.